What is going on, everybody, and welcome back to another video. So today's video, I'm going to be giving you guys a short recap and summary of my trading strategy that I'm using this year so far. Now, over the last few months, basically since December, I've actually decided to refine my strategy. And since I'm mainly trading indices, I also started trading futures. I really wanted to incorporate order flow into my trading system to improve my edge inside of the markets. So in today's video, we're basically going to be going over how I've implemented order flow into my trading strategy and how it's been able to affect my trading journey so far. Not even just that, over the last few weeks, I haven't been trading too much and I haven't been trading normally as heavy as I would have normally done. We don't have these crazy days in the markets, and that's just simply because, again, I'm refining my strategy. And as I start getting more comfortable with my trading strategy, with now implementing order flow, then that's when I could start really posting content for you guys. Again, I'm just starting to get back into the rhythm of things after the holidays, and really I just sat back and studied order flow, back tested order flow, and just tried implementing order flow into my trading strategy as possible. There's still some few things that I do want to add, such as the book map and also the depth of market as well. And then of course I do want to include as well reading volume and delta. So there's still a few things that I still am trying to refine and still trying to add, but for now I just want to go over the footprint charts, go over some of my last recent trades. Not even just that, I want to show you guys that even me being the trader that I am and being in this industry for 7 years, having multiple six-figure days inside of the markets, I'm always finding different ways to improve, and I want to show you guys that as well. So without further ado, let's get right into the breakdown. So getting right into the breakdown itself, as you guys know, I come from a background of trading on MetaTrader, and a lot of these brokerages have been losing their MetaQuotes license. So I have no trading history for the beginning of February, although I did trade in the beginning of February. I've actually switched over to another broker, which we'll go over that portfolio in a second. So basically, like, my trading history is all started again in February, and when I started to feel like I was ready to actually trade with the footprint charts live is when I started my portfolio on futures, which for February so far, for just the futures portfolio alone, I'm up around roughly $17,000, which we'll go over everything in a second. As you guys can see here, I have two of my trading portfolios at its indices and futures together. So in between those two trading portfolios, not trading every single day, not trading Mondays, not trading Fridays, only really just trading the days that I started trading on these new portfolios, which is Wednesday the 14th, Valentine's Day. I've been able to make a total profit of $114,000. Now, my win rate is extremely high for me right now. A lot of the trades I have micromanaged, as you guys can see, like there's a $54 break-even trade, another break-even trade for $124, which is why my win rate is a little bit higher. This was supposed to be a break-even trade, and it was at break-even, but I guess my order didn't get filled on time for break-even, so it's supposed to have been a break-even trade at least $0 or more, but commissions, of course. Then there's just a bunch of other trades here that we can see. There's $12,000, $6,000, a bunch of different trades. We have an $8,000 loss there, but just going over my performance so far, $114,000 net P&L. We have a profit factor of 9.2, trade win rate of 83.33%, and then a 2R multiple. I do want to say typically my win rate is a lot lower than this. Typically my win rate is roughly in the mid 60%-ish range with an average of a 2R multiple. And actually a lot of my most recent trades have been getting closed around a 1.6, 1.7 R multiple, which is why my win rate's a little bit higher. But the way TradeZilla looks at your R multiple is they realize your losses. They look at your losses and compare your losses to your winning trades. And as you guys can see, Monday I had an absolutely huge day in the markets as well. My indices portfolio. Now I'm trading both different portfolios because on the broker that I'm trading on with indices, which there'll be a link down in the description for you guys. So this is my portfolio with indices. You guys can see that it is on MT4. I'm currently trading with Ventura on MT4, which has been a pretty great brokerage so far. I've withdrawn roughly around $62,000 out of the $96,000 of profit that I've made so far. And again, I want to go over that I have two different portfolios because when you trade on brokerages that offer high leverage, I like to go a little bit more risky on those types of portfolios so the returns are a little bit higher. Now on my futures portfolio that I just recently started, you guys can actually see it here. Today I made $12,700 in my futures portfolio. I didn't trade my indices portfolio today. I could have potentially made a little bit more, but I'm actually up 17% in the last 3 trading days, risking roughly 3 to 3.5% per position on my futures portfolio, and I'm up 17% on my futures portfolio, which this is on TradeStation, which is a regulated brokerage here in the United States. So I have a 17% profit on that portfolio as well, bringing me to a total of $114,000 in profit. So you guys could see all of the statistics here. And by the way, for those of you guys that are looking into TradeZilla, you guys can actually get a discount code on TradeZilla by using Raul10. Not only do I love this platform itself because I can go into my statistics and see how I can improve and what areas my trading is lacking on, but I can keep track of my trading journal, and I can keep track of all the trades that I'm taking in a very organized manner and keep my trading such as a business. Now, moving on to the breakdown itself, I want to go over essentially some of the trades that I found to be the easiest to actually catch, and I'll go over some of the trades that I also took today here as well. So going over the first position of the day, I did use a combination of the footprint charts, and I was actually shorting ES. This is where I ended up catching this move on ES to the downside. So, you know, there's a combination of looking at ES and a combination of looking at the market profile and the TPO charts. So I was really looking and paying attention to the TPO charts and looking at the point of control. Now, I know this is a fairly new concept for you guys on my channel, and the best way I can describe this specific chart is it pinpoints the areas in the markets that market is most comfortable with on that specific trading day. So on the previous trading day, we had the POC, or the point of control, of 50.76, and on today's trading day, which is going to be this day right here, we had the POC of 50.74. So you guys can see the market is very comfortable at that price. And with this chart, we'll be able to see the balance days in the markets and the imbalance days in the markets. And the best example I could give you guys of what price the market is most comfortable with, and what do I mean by that, is if I were to put my SVJ up for sale for $600,000 and I get a ton of offers on my SVJ, I know I may have listed it a little bit too cheap, so I'm gonna increase the price of my SVJ. Now say I want to sell my SVJ for 1.2 million and I get no offers on my SVJ for 1.2 million. I know it's too expensive and I need to lower the price. Now say I decide to actually lower the price and I want to sell my SVJ for 900,000 and I still get some decent solid offers on my SVJ there, then I know that's where I'm comfortably pricing my SVJ. And it's, you can take the same theory with looking at this chart here. So that is the level that I was paying attention to on this trading day. Not only is it going to be the previous day's POC, but it's also going to be this key level here on this hour time frame. So when the market actually did open up in the morning session, what I was looking for, this was the market open candle. What I was looking for was a pullback into this range to see if price can actually hold this area, to see if we get some form of aggressive selling in this range, and for price to come back down into its next key level. I'll really only look at the footprint charts when it comes to my key levels. So I'm trading exactly the same systems that I'm trading, except now I have a little bit more of an edge inside of the markets because I can see where there's aggressive sellers, where there's aggressive buying pressure. Not even just that, I can also go a little bit more in depth on the trade itself and understand that, hey, maybe this is not a trade that I want to take because there's still a lot of aggressive buying in this area and I'm looking to go short. So I may want to hold off a bit. And not even just that alone, when you're talking about trading in the markets, you have two different types of participants. You have your aggressive participants and you have your more passive participants. So you'll be able to see where the aggressors are in a specific trade, which is why I decided to actually really dive deep into the footprint charts and start learning them over a few weeks ago. And as I get more and more comfortable with taking these trades, explaining these trades to you guys, you'll only see more and more concepts or more and more videos on my YouTube channel about this, just to provide as much value to you guys as I possibly can. So like I was saying, my game plan on the day was to look for price to come up into this POC range, which is going to be 50.76, looking for a bounce play off of there to short down into 50.65, or if price were to have taken out this 50.76 range, looking for a break and retest to go long up into the 50.91 range, which I actually took two trades on this specific day, which we'll go over both of them. So the first trade, 5-minute time frame, market actually opened up and we had price pump all the way up into this area. So immediately that's when I started to open up my footprint chart here, which I'm going to pull it up for you guys here. And we have this 76.50 range here. So I'm going to go a little bit more in depth in this. And for those of you guys who don't know what this is, because again, I have a background in just Forex indices, commodities, not necessarily futures. Essentially, you have the bid and you have the ask. So you have the bid on the left side and you have the ask on the right side. Whenever a buyer places an order, they're getting filled on the ask. And when you get filled on the ask, that is going to be considered an aggressive buyer because they're willing to get in at whatever price the market is at or whatever price the ask is at. And the same exact thing with the sellers, except they're getting filled on the bid. So you can think about all of these numbers on the left side to simplify it as the sellers, all of the numbers on the right side as the buyers. Now, when it came to this specific area, I was looking for one of two things. Are sellers aggressive at this area? And if so, where can I take advantage of this potential trade? I was also paying attention to how the buyers were acting around this range too. Are the buyers aggressive around this area? And if so, are the buyers going to have any follow through? And if they're aggressive, buying is going to be rewarded and we're going to see a move to the upside. So when it comes to this area, we look at these numbers, it's like, okay, well, we had 2,000 orders hit the bid, we had 2,000 orders hit the ask. We had 389 orders hit the ask, and we had 244 orders hit the bid. Same thing over here. Now over here we have actually 0 orders hit the bid and 32 orders hit the ask. So there's still aggressive buying in this range here. Now when I look at the next candlestick, we have very similar concept. We have 167 orders hit the ask. We have 143 orders hit the bid. But what peaked to me was we had 680 orders at 5076.5 hit the ask. Now, when we compare that to the bid, only 342 orders hit the bid. So what that is telling me is that there's more aggressive buying in this area than there is aggressive selling. And the thing about that is we didn't have a follow through from the aggressive buying. So the best way I could simplify is that we actually have passive sellers in this area that at some point in time, when the demand for the buying actually does go down and the demand for the buying slows down, we are going to see that move to the downside. So once I started to notice that there was aggressive buyers here, but the aggressive buying didn't get rewarded, it just basically tells me that there's most likely some form of passive selling around this price range that we can actually see price come down. If that buying demand actually does slow down or does come to a stop, then we'll see price come to the downside. So once I actually saw that first rejection, again, I'm looking at this from two perspectives, from a price action perspective and then from the footprint chart perspective. So we have the aggressive buying in the area, but there's no follow through as a confirmation. Again, we're looking for the setup. Normally by now I would have probably just taken the entry, but I could have potentially avoided any type of loss in the future just by looking at the footprint charts, and it's giving me more of an edge in the markets, right? Normally, like I was saying previously, we already have the rejection confirmation here to start looking to go short. All I'm simply looking for now is that, is there going to be continued aggressive selling or is there going to be continued aggressive buying? And if those buyers that are aggressively going long going to be rewarded? And notice that we did have the aggressive buying and those buyers weren't rewarded. So at that point in time, when price action started to actually come back down and I actually saw the asked and I actually saw the bid start getting filled more, once I saw more aggressive sellers come back into the markets is when I actually decided to execute on my first position, which I actually executed around this 50.75 range with my stop loss above this high at 50.78. In terms of our multiple, let's go back to our regular charts. Now, in terms of our multiple, 50.75, went short around this area up here. So 50.76 is where I went short with my stop loss above this high. And then my take profit, my original take profit was all the way down here at 50.65.75, all the way down here where it's going to be our previous key level and our current or our previous low as well, which I'm also going to mark off this area for you guys here as well, which is why I'm going to break down why I closed the trade. So that was my reason for execution. That was my reason for entry. Now, when it comes to me holding the position, we saw immediately that price dumped. Price came all the way back down into this previous support range and we were starting to reject this area where I did see a ton of aggressive buying come back into this area. So I decided to actually close the position and I secured roughly a 2-to-1 risk to reward ratio. On this specific trade, I was risking about $4,000 and I ended up making a total of about $7,261. Now I ended up going short in this area again for literally the same exact reasons. But once I saw that there was no follow through with the sellers, I moved my stop loss to break even and I ended up losing money on that trade, which if we go back into this position over here, you guys could see. Let's go back. I ended up going short along this area over here, and I got stopped out by this candlestick right here after I moved my stop loss to break even, which I could have potentially made a little bit of money on this trade, but it was just a break even trade. I ended up again moving my stop loss to break even on this second trade, just simply because there was no follow through with the sellers. There was aggressive selling, but they weren't getting rewarded. We didn't see a big breakout to the downside like we saw in the first trade. Now, when it came to my third and last position of the day, originally I wanted to look for a break and retest, another bounce play of this 5076 range to look to buy it back up into these highs, which I missed out on this. I was actually at the gym and I went to lunch, came back to the charts. When I was actually at lunch, it's pretty funny. I was actually looking to go short in this area too, but since I didn't have my computer, I didn't have my charts open, I decided to just wait till I get home, and hopefully price action didn't move too crazy, which I did miss out on this amazing short opportunity, looking for price to pull back down into the POC, which as you guys could tell that the POC of today was also very similar to the POC of the previous trading day. I was still looking for price action to come back down into this key level. Now, when it came to me actually taking this very last position, again, it came back down to the footprint charts. Price action didn't just come all the way back down. Typically, when you do see a huge move like this, where you have a big move to, let's get my drawing tools here. When you have a big move to the upside, a pullback into a support range, a big move to the upside again, a rejection, and then a pullback, is because at this point in time, you're most likely going to see price action continue to go down. So I was looking for price action at this point in time, again, to come back down into this intraday key level. Going back to the footprint charts here was where I was looking at price action, see how price action was acting around here. Again, all I simply was looking for to see if the selling pressure would continue to maintain. So originally we had a ton of orders start actually hitting the bid. We had 759 orders hit the bid, 641 hit the ask, 211, 341. Then what I saw was that we had a little bit of a pullback here. So of course I'm not just going to go short right away. My initial game plan was, okay, well, let's see if we can actually break under this area, pull back up, and if sellers can continue to maintain themselves as the aggressor here, then I'm going to be looking to continue to take shorts. We saw an immediate pullback, and then what I started to see was that this buying, the buying pressure, essentially, the aggressor on the buyers actually ended up slowing down because we only had 18 contracts actually hit the ask. So it's like, okay, well, if they're slowing down at this point in time, we're most likely going to see price action come back down at least into support, and then probably going to see price action break through there if buying pressure actually has slowed down. So when price action, and we can also see here as well, 911 contracts ended up hitting the bid, and then we had only 18 contracts for a follow through, and then we have a weak doji candlestick that couldn't even close above the highest high of the previous candlestick. So it's a combination of all of these different things put together in just different situations that allow me to have these great trading opportunities. Now the next candlestick actually opens up. We had 390 orders hit the bid, 382 hit the ask, 166 hit the bid, 174 hit the ask. Once I started to see that 568 orders that sellers were making themselves the aggressor here again, I decided to actually execute myself on the position after price action ended up coming back a little bit under this price range, 50.79, with my stop loss above this high here. So going back into the charts with my stop loss above this high over here, went short around this range, stop loss up here, and then my take profit again was all the way down here for roughly a target of 5.78 risk to reward ratio. Now I was paying a little bit more attention to the footprint chart at this point in time, which let me pull that back up here. I was paying a little bit more attention to the footprint chart at this point in time here, and what I ended up seeing was that price action price action came all the way back down into 50.77. We still had aggressive selling at this area, 630 orders hit the bid. We had 485 orders hit the ask. We had 54 orders hit the bid here when this candlestick closed. Zero orders on the ask I hit, meaning that there was no aggressive buying in this area. The next candlestick opens up immediately, 257 orders start hitting the ask. So I still see sellers being the aggressor here, which is why I continue to actually hold this position. I continue to hold this position throughout this candlestick. I continue to hold the position throughout this candlestick. Now, what I started to take note of is once this candlestick started to pull back very aggressively, I ended up seeing that again, like there's no real follow through with the sellers. There's a lot of volume being lost, and we have a big rejection towards the downside, and we have a rejection towards this area of support here at 50.73, which you guys can see that there's a few candlestick rejections over here, and there's this consolidation area. So I decided, you know what, like if we can't blow past through this area, and this was while I was still holding this position, and we can't close under this area, and we don't see a follow through with the sellers, then I'm going to close the position. So again, going back to the same concept, if we see that there's a ton of aggressive selling and they're not being rewarded, that's because somebody's passively buying up those orders. And then once that selling demand dies down, we'll see price action go in the opposite direction. So that was my thought process as price action was approaching this other key level over here. So I decided to actually close the position and realize roughly another 2R multiple. So I hope I was able to provide some form of value to you guys on the footprint charts and how I've been using them, how I've been able to interpret them. And so far, it's been going absolutely fantastic. Now, not to say that I'm only going to get better, but again, like as time progresses, I'm only going to feel more and more confident to start talking about the footprint charts with you guys. But I wanted to give you guys my exact thought process on the 3 trades that I took today in the markets. That ended up netting me a total of around $12,000, and again, trading this same exact way over the last 30 days ended up netting me $114,000, which is fantastic. For those of you guys that are interested in trading with the brokerage that I'm trading, there will be a link down in the description. And for those of you guys who don't have an account with Tradezilla yet and you want to take your trading to the next level, especially in terms of becoming a professional, profitable trader, then I'll also have a discount code for you guys, so you guys can get 10% off of your first subscription with Tradezilla. Other than that, everybody, I hope you guys have a great rest of your week. If you guys have any questions, feel free to just shoot me a DM on Instagram. Not just that, you guys can also go find more free value inside of the free Telegram. Take care, everybody.